Welcome to the chip market, the place where we help you invest smarter in the world of semiconductors. Today, we're looking at what I think is a really fascinating turnaround story, the chip maker, ONsemi. They're in the middle of a huge strategic shift, and we're going to ask the question, is the market missing the bigger picture here? So let's frame this up. We're talking about ONsemi, a company that is fundamentally pivoting its business. And that pivot, well, it's created a pretty unique investment profile. The real question we're digging into is whether the market is actually priced in the company's long-term potential, especially with all the recent industry headwinds we've been seeing. All right, let's get right to it. Our thesis is that this situation has created a compelling buying opportunity. The stock's trading, roughly 50% below its all-time high. But at the same time, the company's fundamentals are being rebuilt from the ground up for a really strong recovery. And it's all thanks to this very deliberate strategic shift. To really get why this is an opportunity, you first have to understand the core of this transformation. I'm talking about the strategic shift in ONsemi's entire business model. You see, ONsemi made a really decisive move here. They've walked away from their old playbook, which was all about selling huge volumes of commoditized chips. The new strategy? It's about pruning that portfolio and focusing, almost obsessively, on high-value, high-growth areas where they can actually build a strong, defensible market position. It's a quality over quantity game now. And here's the proof in the pudding. This chart shows you the direct result of that pivot. Just look at it. Automotive and industrial applications now make up nearly 80% of their revenue. Now, this didn't happen by accident. This is the outcome of a very focused effort to align the entire company with huge long-term growth trends. So how is this new focus actually paying off? Well, it's translating directly into some seriously dominant market positions, especially inside the incredibly demanding automotive sector. Take image sensors for cars, a really critical area. In this space, ONsemi is the undisputed leader. And this isn't some niche market. This technology is fundamental to the advanced safety systems that are being built into pretty much every new vehicle hitting the road. And this really illustrates their dominance where it matters most. In the highest value segment, which is Advanced Driver Assistance Systems, or ADAS, ONsemi commands an estimated 68% market share. Think about it. In these safety-critical systems, performance and reliability are everything, and that creates incredibly sticky customer relationships. Now, let's talk about EVs. The industry's massive shift to electric vehicles is another powerful growth engine for them. ONsemi silicon carbide, or SiC, solutions for EV powertrains can add over $200 of content per vehicle. That is a huge increase compared to what they'd get from a traditional gas-powered car. This quote from the company really highlights how durable their design wins are. You see, once ONsemi's tech is designed into a vehicle platform, it's typically locked in for the entire 5 to 7 year model run. That makes it incredibly difficult for a competitor to come in and displace them. Okay, so despite these really powerful long-term tailwinds, ONsemi hasn't been immune to the recent industry-wide headwinds, and these have affected the entire semiconductor market, not just them. As you can see, revenues contracted pretty significantly over the past year. This was driven by a really sharp inventory correction. What happened was customers in the auto and industrial sectors basically had to work through all the excess supply they had built up. And of course, that downturn hit profitability directly. Gross margins got squeezed, falling from their recent peaks of nearly 48% all the way down to a trough below 38%. But and this is important, management has stuck to their ambitious long-term target of getting above 50%, which shows you how confident they are in this new, higher-value product mix. So here's the crucial point. A huge chunk of this margin decline isn't from pricing pressure. It's actually from temporary under-absorption charges because their factories weren't running at full capacity. As demand comes back and those factory utilization rates climb, that 900 basis point drag should just reverse. That provides a really nice mechanical lift to gross margins. So you've got this cyclical low, right? And you combine it with that strategic pivot we've been talking about, and that's what creates the core of this investment opportunity. Now let's talk valuation. Now, if you compare ONsemi to its direct competitors, you might look at its PE multiple, around 20 times, and think it looks a little expensive. But honestly, that's a misleading number because it's based on earnings that are at the bottom of the cycle. When you start to look forward toward a more normalized earnings environment, its valuation becomes way more compelling. So we see three primary scenarios from here. The The bear case, where this downturn just drags on, could see the stock fall to around $40. Our base case, which assumes a moderate recovery, suggests a target of $75. And then there's the bull case, where a really strong EV rebound drives margins way higher. That points to a potential price of $95. Of course, any balanced analysis requires a clear-eyed look at the potential risks before we can get to a final conclusion. For us, there are 3 key risks to keep on your radar. First, how is automotive demand going to hold up, especially with the company's exposure to China? Second, can they execute on the really difficult task of scaling up their complex silicon carbide production? And finally, what happens if pricing starts to erode because this inventory cycle just drags on longer than anyone expects? So our conviction is that the market is undervaluing ONsemi's successful transformation into a much higher quality business. Right now, it is squarely focused on these massive secular growth drivers like vehicle electrification and autonomy. And we just don't think the current stock price reflects this vastly improved profile. That's why we're recommending a buy with a $75 price target. Now, if you want to track this thesis for yourself, there are 3 key metrics you should watch very closely. First, factory utilization rates. That's a direct indicator of margin recovery. Second, the pace of their silicon carbide revenue growth. And finally, listen closely to management's commentary on the book-to-bill ratio for any early signs that demand is starting to pick back up. And that's our breakdown of the turnaround story happening at ONsemi. The question that remains is, will the market reward the strategic pivot before the next cycle really kicks in? If you found this useful, do us a favor, like this, share it, and be sure to subscribe to The Chip Market for more analysis. Thanks for watching.